Right. In the last class, we started property, plant and equipment, and then we discussed the basics. What is property, plant and equipment, and how to recognize, and what are the measurements, and how, what is the cost of such a property, plant and equipment. And also we discussed capital expenditure, revenue expenditure and deferred revenue expenditure. What is capital expenditure? Anyone remember?
Expenditure is expenditure for non-collection more than 1 year.
Any other explanation? You remember what we discussed? Capital expenditure is any expenditure that will either increase the efficiency of any given asset, or you would acquire an additional non-current asset, or you would construct a non-current asset. Any such expenditure are known as capital expenditure. It could be purchase of material, paying salaries to labor, like that. So it could be any of those items as long as that meeting this condition. Secondly, we also talked about if we define what is property, plant and equipment. Property, plant and equipment are non-current assets. And then we said tangible non-current asset. What is tangible non-current asset? Any non-current asset you can touch and feel. That are called tangible non-current assets. And then these are used for the purpose of production of goods and services, supply of goods and services, or administrative purposes, or for rental to others. And this will bring economic benefits for a period exceeding 1 year. If you satisfy all of these conditions, Walaikum Salam wa rahmatullahi wa barakatuh. Please come. Welcome to our new premises. Shukran, Jazakallah khair. We just started. Inshallah, we will arrange much better as the time passes by. So we started discussing this property, plant and equipment. You need that light? Yeah. Fine. Thanks. So then we talked about what is the cost. Costs are directly attributable in having the assets in our intended location and workable condition. Good example, now this AC, I want to find out the cost of AC for my business. I went to the shop, they are selling the AC. They told me you have to pay 7,000 riyal. So that is the purchase price. I pay that money, finished. Then can I say that after paying that 7,000, can this AC work for me? No. Then the AC has to come to this place. Fine. Transportation done. Maybe we pay 100 riyal, 50 riyal, 200 riyal. So cost purchase price plus the transportation cost. So AC came and sitting here. Will it work? It won't work because we need some before having the AC functioning, some infrastructure arrangement needed to be done. So like the wiring, we had to do some additional preparation with regard to wiring, and the wiring condition also needed to be changed, which required us to pay additional. So that's also part of our cost. So if you go back to the definition, any expenditure that is incurred in order to bring the asset to its intended location and workable condition. All those expenditures are part of the cost of the asset. In addition, there are expenditures which are not part of the cost of the asset as well. Example, now these guys came who worked here. They purchased meals and drinks. Now, giving them a meal and a drink or not giving them a meal and a drink, if you ask the question, will the AC work or not? Yes, AC will work. So that cost of the meal and the drink is not part of cost of the asset. That is expenses. So this is what the basics that we needed to understand, and that's what we discussed in our last class. Today, we will continue to understand the meaning of the concept of depreciation. We will study today depreciation. Before we study depreciation, I just want to recollect our discussion on accrual concept. Remember? Yeah, please. So, accrual concept. Remember we studied in our previous classes, we discussed this. Accrual concept or accruals are related expenditure for the related given period to match the related revenue. For example, for the month of April, total my sales $50,000. How much is my sales? My sales dollars. Now, when I prepare my profit and loss account, can I show my net profit as 50,000? My sales 50,000. Can I say that, oh, I am very happy my net profit is 50,000? No. There are related expenditure which we needed to incur in generating this 50,000. Example, salaries. Somebody needed to sit in the shop and they need to sell. So they won't do it for free. You have to pay them the salary. So salary will be one related expenditure. Likewise, electricity, water, telephone, and so on. So in the shop, you have a table, you have computer, you have AC, you have fixtures, fittings, and all that. These are we generally call fixed assets. You are using these fixed assets. Even you may have a vehicle to transport goods and to take the item to customers and all that. So all these fixed assets you are using it for the purpose of generating this 50,000. So isn't it not fair for us to think that the usage of this asset also supporting us to generate revenue? If in this example here, I have this table, this AC, this TV. If I don't have this, the required amount of facility we won't have in running this class. So I don't have to use this. So the moment I started using it, that also helping me generating revenue. But I am saying is fair or not fair? It's fair. So when I am using it this, then I have to consider that also. Now see, I would have paid here 1,000 or 2,000 or 5,000 riyal in getting all this here. And I am not going to charge entire 5,000 to my profit and loss account for the month of April. Because this asset will last for me with another maybe 3 years, 5 years. So then I need to pick and choose a small portion of the total value for this given period. That picking up that small portion for the total value in a given period is what we call depreciation in simple terms. So depreciation is, if you don't have any other condition, it is because of wear and tear. In normal English, what is the meaning of this word?
Usage.
Usage. You buy a t-shirt, you wear it for 6 months, and then you tear into pieces and use it in the kitchen. Isn't it? So this is what the assets that we are doing. We buying the asset, we are using it, and then we are throwing out. So during the period where we are using in a a good condition, and during that period we generate or we incur expense we known as depreciation. So, depreciation, to understand depreciation, we need to understand some other terms. First term is the cost. All of you know or anyone don't know? What is cost? Do I need to give you definition or already we gave? I have already given. Everyone knows. So, we are happy with this. Let's say, I purchase an asset. I purchase a motor vehicle for 10,500. And I can use this for 5 years. At the end of the 5th year, I can sell this motor vehicle for 500 riyal. I can sell this. Now we have a specific term for this. Anyone knows the name?
Resellable.
Gain. Gain.
Gain.
Resellable.
Gain.
See what I mean, Habibi? When you buy a car,
Okay.
you pay 10,500. You could use this for 5 years. So you used it. End of the 5th year, you go to industrial area SP number 10, you can sell this for 500. What do you call it? What is the name we give? That is the question.
That is on profit on disposal, fixed asset disposal.
This is disposal. And you said gain. Actually, this is known as scrap value. The amount, now mobile, in other words, you use it for like 1 year, 2 years, or 6 months, then you want to change it. You purchase 2,000 riyal, now the man who buys it asks for 300 riyal or 200 riyal. So that amount, small amount, insignificant amount or negligible amount, we name it scrap value. So the second definition, second term is scrap value. First term is cost. So we now need to understand the meaning of the word scrap value. Can you write it down? The proceeds that can be received at the end of its useful economic lifetime. I will teach you this also later. What do you mean by, see, this car again? You purchased on 1 January 2015. 5 years meaning 31st December 2019. 15, 16, 17, 18, 19. So, after 5th year, can you use the car or you can't use the car? You can use it. But only thing is, your accounting wise, you may not have a value, but still you could use it. But what could be the time period when this car helping you generating good return? What is the time duration? In that 5 years only, the car will give you the efficient return. After 5th year, every 1 kilometer car will stop, you need to get down, you need to push the car, you need to kick the motor, so many things you may have to do. But during these 5 years, it will help you generate good return. That's why we call it useful economic lifetime. Okay, we will define that later. But the scrap value is at the end of its useful economic lifetime, how much you can get from the market. That's the scrap value. Sometimes, some methods, you you may not have scrap value. Let's say you got a land from the government. You put up your own factory, 20 years. End of the 20th year, you need to return the land back to the government. But this building is not owned by the government and not belong to the government also. Building belongs to whom? Us. But now 20 years finished. So will the building be that much good quality? Can you keep the building there? No. You need to remove the building. You need to dispose the building. Can you do it for free? You need to bring some laborers, you need to pay them. So sometimes you may not have scrap value, you may have disposal cost. At the end of its useful economic lifetime, in order to clear the situation, you may have to incur disposal cost. For example, these days if you see from some area like Doha Jadid, so some areas you see these old buildings have been destroyed. You think that the government is doing for free? Government is paying to someone. That's a disposal cost. So next point that you need to understand is
that's a good example for that, especially in our malls. Make a shop, fit out.
kiosk.
Not yours, even a shop.
Yes.
Fit out even. When you leave, you have to clear it.
Exactly.
You pay.
Yeah, definitely. So maybe Hadara also have experience. Similar example what I'm telling you. So they also have shops in malls.
Yeah. And you leave, you have to give the place as they, whatever it is, duty or anything. So you will pay for it.
Exactly.
But these all depending on the contract.
Definitely, yes. The contract is matters.
So if contract doesn't say you have to vacate it as it is, you have to give.
Then that's a set for them.
Then
If the contract is saying that you need to clean everything as at the beginning, then that's a cost for you. Later we will study a standard named IAS 37. There we will talk about more about this. Anyway, so let's write it down. The cost incurred in order to surrender the assets at its original condition at the end of its useful economic I believe it's clear. Okay? So, fine. So now we define scrap value. We define cost. Now let's try to define one more thing.
useful economic life definition.
I will come into that. Don't worry. Don't jump the gun. There is a story. Just for the sake of keep the class up ongoing, I'll tell you this. There are three people got stranded in an island or in a seashore in an island. No help, nobody there, no one to come. Totally stranded. You know what the meaning of stranded, right? No support. Like you are in a small place. surrounding is full sea. You are here. So if the sea is maybe 20,000 kilometers, like that. So no support unless Allah brings some help. So these people are like for 2 to 3 days. They came in a ship. One guy is an engineer. Another guy is an accountant. Third guy is the owner of the company. Like Abu Talib, even another guy. So these 3 people are there, and 2 to 3 days they had water, some food from the ship they came, they managed. Now frustration developing too much, and they were like, when you are frustrated, you are like, your body language is too much different. So one guy what he did, he kicked the seashore by his leg. There was a small bottle with a lid like this. Because of he kicked, the lid opened. Inside there was a genie.
Gin.
Not gin. The genie is
Ghost.
like a ghost. Was inside this bottle for the 20,000 million years before. Some magician put him inside and locked him and then put him in the sea. Now it also came on the seashore. He was there inside 20,000 million years now. He came out, he is very happy. He said, okay, you brought me out of the bottle, so I need to give you some help in return. One person, one wish. So immediately the accountant told, I need to go to New York, work in the Wall Street in one big company. Okay, your wish is taken. Then he vanished. He went to US. The second engineer, he said, I want to go to UK, to Japan, and work in one of the leading Toyota group as a production engineer. Kala, he also went. Now the turn comes to the owner. He said, tomorrow morning 8 o'clock, these 2 guys should be in my office. So don't jump the guns. Anyway, just for the sake of story, I said this. Now let's come back to what we call depreciable amount. Actually, this is an equation. Equation is cost minus scrap value. We know what is cost, and we also know what is scrap value. So now, do we know what is depreciable amount? We know what is depreciable amount. Another, so you want me any other explanation on this, or is that clear? Baha? Good. Hobby?
Yeah.
Very good. So now we will go to another definition. See, this is different to this. This is depreciable amount. This is depreciable assets. Now, when you talk about non-current assets, or when you talk about tangible non-current assets, or when you talk about property, plant and equipment, this property, plant and equipment can be divided into 2. One is depreciable asset. Other one is non-depreciable asset. We need to understand what you mean by this. Under the property, plant and equipment, there is only one asset which is non-depreciable asset, that is land. You have a land, will it depreciate? It never ever depreciate unless the time when we reach the world to end. Until then, the mashallah land will be sitting there only, unless someone is partitioning. Let's say, for example, my father's land, then me and my brothers, then we share. And then I have a land, my kids will share. And then my kids, they have a land, then their kids will share. So it will go small, but in total, the given amount of land is there, apart from the, sea is capturing the land. But in normal circumstances, land is not depreciable. All other assets are depreciable. In other words, what you mean by depreciable assets are those assets whose lifetime is limited. So, those assets whose lifetime is limited. I hope it's clear. So you have property, plant and equipment. The property, plant and equipment are two types: depreciable assets and non-depreciable assets. The depreciable assets are assets whose life is limited. Understood or not? Found?
Yeah.
Good. Some assets may be like cash, you may only keep it for 2 years. But some assets we can keep it for 20 years. Some we can keep it for 50 years. I don't know this building how long now. Probably more than 20 years. Maybe. So still mashallah building is in a good condition, maybe 100 years. But yet in end of the 100th year the building will collapse. But land is not like that. So now we learn first scrap value, depreciable amount, depreciable assets. Now we will try to learn useful economic lifetime. This is the time period when the asset functioning economically. You can assume like this. I don't know, in our country we have experience. Like when you travel some vehicle, every half a kilometer you need to stop the vehicle. You don't stop, the car automatically stops. You get down, you check, you open the bonnet and then you do something. And I remember there were lorries. I don't know you have seen that lorries. The lorry, the bonnet area, let's say this is the lorry. There is a hole here. To start the lorry, you need a big steel. You put that steel inside here, and then you have rotate the thing. You need to rotate there only, then the lorry will start. There is no system of key or all this. And then this lorry, every 2 to 3 kilometers, you have to stop and do this. So that means this is no use of that. So what I am saying is, for you to see any assets are in good condition, what you mean by useful economic lifetime is that time period only that asset functioning. So a time period when the assets produces economic returns to the business. Economic returns to the business. Who decides this time period? For example, let's say AC, how long will it last? Let's say 10 years? No. How many years?
AC?
AC.
Stay with us? Yeah.
Let's say 10 years. Who decides? Is the AC company decides, or accountant decides, or the owner decides, or the management decides, or the man who come and fix? Who decides? Who decides the time period? Company. In company's point of view, what is the right name you can give?
The owner or the producer.
More than the owner, the management of the company who decides. Why? Based on the previous experience. And there is no given equation. So it's like 2 plus 2 is 5 or 2 plus 2 is 4, then okay, 10 years. Not like that. Based on the management policy. It's just that the policy. There is no challenge. You cannot go and challenge that. So they cannot give you a document. Okay, there may be SOPs, standard operating procedures may be there. They may say that minimum our AC will last for, they will give warranty. You know, remember, I purchased that this fridge. They give me 1 year body warranty and 5 years compressor warranty. So minimum the fridge should last with us for 5 years. But again, the company management can decide. It could be 3 years, it could be 8 years, like that. So it's a call from the management based on the policy. Clear? So now we have learned several terms. Now finally we will learn depreciation. Now if you read this, all our definitions which we learned previously, here. Depreciable amount is what? Cost minus scrap value, am I right? And the depreciable assets, I hope you all know that. And the useful economic lifetime, that also we know. Now let's, if I bring an example, can you calculate depreciation for this?
PG, what's meaning? PG. PG first. PG.
PG means example of it. Masalan, Taqriban. Example is what? Taqriban.
UELG.
Useful economic lifetime.
6 years of
Useful economic life.
years.
6 years, yes, 6 years.
You need the depreciation
Yeah, per year. 1 month.
5
for
years.
6 years.
Yeah, after
So
1
years?
year, yes.
$3,000.
766.
Yeah. Another. Yes. You read the definition. Systematic allocation of depreciable amount. How much is the depreciable amount?
No.
18,000.
18,000. You should divide by
6.
how much?
Okay. 3,600.
I think you did the same mistake.
Yeah.
So first you need to calculate the depreciable amount. The depreciable amount is cost minus scrap value. Cost is 19,000. Scrap value is 1,000. So depreciable amount will be 18,000. Lifetime 6. So the depreciation is now I deliberately didn't give the equation. Now I will give you the equation. So the depreciation is equal to cost minus scrap value divided by useful economic lifetime. Now, okay. Postpone it, push it. Okay, so now we understand the basics of how I calculate depreciation. Why should we do depreciation? What are the reasons behind why should we do depreciation? The very first reason, the reasons for the first one is because of the accrual concept. Second one, we are not there. Now if I ask you a question, you buy a laptop, you don't use it, you keep it in your office and in the bag for the next 2 years. Do you need to depreciate this or not? You still have to depreciate. There is no question of that asset is being used or not used. The point when you purchase the asset until the time when that asset will be based on the company policy, how many years it will last, you need to calculate depreciation regardless of whether you are using it or not. Third reason, what do you want?
AC not working.
Hmm?
AC not working.
Sorry, thank you. It's on 27. Who made it?
Morning which
Nobody.
spell पड़ेगा
Obsolescence. Now what is impairment? Impairment is something like damage. You drive a car on the road, suddenly you meet with an accident. The car becomes damaged, and that is impairment. Or you have a machine, you do some production in the factory, and some electrical short or something, the machine breaks, impairment. Natural disaster, tsunami or earthquake or for some reason your building collapse, impairment. So this is also part of the reasons why we should depreciate our assets. On top of all, it's because of management.
management policy.
Yeah. Methods to calculate depreciation. Anyone remember any? What are the methods?
Straight line method.
Okay.
Reducing by the stock.
Okay. Any other? First one is, as you all said, straight line. Number two,
Production units,
Production units or hours. Production hours.
hours,
Yeah, production units or production hours. Those are the two methods that is important, and in the exam more than 99% of the time they will test only these two. They will not talk about the other method, but still there are these methods available also. So we try to understand each of them. Straight line method. The important point about straight line method is that every year your depreciation will be
same.
equal. Exactly. For example, if you have an asset, the cost of the asset is 12,000, scrap value 2,000, lifetime 5 years. Now, how to calculate depreciation using straight line method is depreciation is equal to cost minus scrap value. We have a, if you want, you can put another name here. You can write depreciable amount. Instead of writing these two words, if you want, you can write this. Clear? Divide by useful economic lifetime. So your cost is how much? 12,000. How much is your scrap value? 2,000. And how many years your lifetime is? 5 years. So 12,000 minus 2,000. And then divide by 5. Per year depreciation is 2,000.
But in actual, we don't have scrap value.
If you don't have, then answer is 0 there.
Okay. And in this case,
12,000.
12.
Divide by 5.
So there is a question.
Yeah.
At the end of the assets, when we going to resale or some, that time we are getting some amount. That will be treated as a scrap value?
No. Your scrap value must be decided before. Today I am buying this car. I want to fix my depreciation record in my account. Then I should, I paid for 2,000. I should get, okay, 300 or 400 real I will get at the end of the 2 or 3 years.
Before sale.
But at the time of selling, you may get 500, you may get 100 also. Depends. So that's a different story.
Where will be count?
The scrap value is not part of your accounting actually.
Only a decision.
It's just for calculation. We are going to see the accounting also, then you will understand even more better. Now, we calculated the depreciation 2,000. Let's work out the mathematics here now. How this works. Let's try to find out. Here 1, 2, 3, 4, 5. In the first year, what is your cost?
12.
12,000. Second year, how much is the cost?
10. 10.
Again, the cost. How come then?
Decrease 2,000.
Minimum.
Same.
Same.
Any year, the cost is still 12,000 for you.
Yes.
Cost.
No change. Paham malala? Then depreciation per year. End of first year, how much is the depreciation?
2,000.
2,000. Second year only, how much?
2000.
2000. Third year only.
Same.
Now we have a different name here, something called accumulated depreciation. What do you mean by accumulated depreciation is, after the end of any given year, how much is the total depreciation so far you have calculated. End of first year, how much is the total depreciation you have calculated? 2000. End of second year, 2000 plus the second year depreciation, so 4000. Third year,
6.
fourth year,
8, 10.
8, 10.
10.
Very good, must both. Now, there is something called net book value.
Net book value.
Yeah, but there are different names. Net book value. Or sometimes you can call it written down value. Some books sometimes uses book value. Oh, sorry, another word. I forgot that.
This same, two same, huh?
All these three words have the same meaning. NBV, WDV, CV. Net book value, written down value, or carrying amount, or carrying value. Carrying amount also you can say. All these have same meaning. I will read it. Let's look. See, equation for any of this is this. Cost or recoverable amount. Sorry. Cost or revalued amount. You have to write like that. Cost or revalued amount minus accumulated depreciation plus accumulated impairment. The total of these two, you will subtract from this. That answer is net book value.
Plus the column. No. Cost, depreciation, and the other one.
Accumulated depreciation.
Yes.
Yeah.
ACC or
Accumulated, the full form.
Accumulated.
Full form is this. Accumulated depreciation. All of you understood this? Cost or revalued amount. Why? As of now, we have still not studied revalued amount, but later we will study. So then, as a complete equation, you need to know that. Minus accumulated depreciation plus accumulated impairment. Can you also write a small point here like this? What I mean, all assets will not have impairment. Only some assets may have impairment. So, if you have impairment, you need to take impairment. If you don't need to. Only then you take the accumulated depreciation. Now is that clear? What is net book value? All of you know?
this must accumulate
Impairment.
What's meaning limit?
अभी ज्ञान को कितना हुआ? इनका रुपया तारीख gone. Accident.
Yes, I see.
Manvida?
Yes, but always coming first one.
Accumulated
First one minus
depreciation.
accumulated AS.
That always there. Okay, now go back to this table now. Can you please, yeah sir. How much is the net book value?
Insert.
First year. Huh?
Insert.
Good. Mr. Nasik, second year? 8,000. How many?
6.
Mr. Baha?
4.
4. And then Mr. Yasser.
2.
See, what is our useful economic lifetime? 5. End of the 5th year, what is our scrap value?
2.
That answer should be end of your useful economic lifetime, your net book value should be equal to the scrap value. Clear? Yes or no? Suppose end of the 5th year you are selling this asset. If you sell for 2,000, you will not make any profit or loss. Because your net book value is 2,000, you are selling for 2,000 colors. But if you sell for 2,500, what is your profit? And if you sell for 1,500, loss of 500. Understand? So this analogy or analysis important. You need to understand this. Is that clear? Okay.
One question.
Yeah.
If the 6th year it still remain, there is no depreciation.
Colors, no more
Because the
depreciation.
2000 will remain.
Yeah, that 2,000 will be. You cannot do any more depreciation. Now, we'll draw a small graph. Depreciation for what is the full form of SLM?
Straight line.
Straight line method. Yes. That okay, right? Do I need to write full form? No need, no. Straight line method. SLM is straight line method. So if I draw a graph, this is the cost, this is the lifetime.
Depreciation for straight line method.
Yeah. Understood this graph or not? At the beginning of the assets usage, what is your cost?
12.
Your cost is 12,000, correct? End of first year, your net book value how much? First year, net book value is 10,000. End of second year, your net book value is 8,000. End of third year, 6,000. End of fourth year, that is 4,000. End of fifth year, 2,000. Clear? What is the point I am trying to raise here? This line is straight, downward sloping straight line. That's why we call it straight line method. And also a more important condition, if you find out the gap, this gap or this gap, sorry, this gap, this all gap in distance should be equal. Clear? Because every year my depreciation is 2,000. Pantali? Good. So, this is straight line. Now we move on to the second method. reducing balance method. That's also a good idea. The second method is the reducing balance method. The first method, as you understood very clearly, every year the depreciation is equal. Now, with that understanding, can you guess what could be the depreciation for given 2 years? If the year one depreciation is $1,000, if we are using the second method, what do you think the year two depreciation is? Less than 1,000. That's the name says, reducing balance method. Every year the depreciation will become smaller, smaller and smaller and smaller. Clear? Now, how to calculate? Let's say cost. 12,000. Scrap value 2,000. Here they will give an additional information. Okay, let's discuss at this point here. See, how many years?
5.
If I ask you a different question, what is the percentage of depreciation? How? How much?
20.
How do you calculate it?
Divide 100 5.
By 5. Very good. That's the exact calculation. So here depreciation rate is 20%. But are we using depreciation rate? We are not using depreciation rate. We are using the
5.
yes. But if we want, we can use the depreciation rate also. How? See this here. 12,000 minus 2,000 into 20%. What's your answer?
2,000.
So this is another way of calculating the depreciation. Now go down. In the second method, regardless of whether they have given you the number of years, useful economic lifetime, it is mandatory, it's compulsory that you need to know the depreciation rate. Number of years, not important. The question can give you, they may not give you. But if the question is asking you to calculate depreciation using reducing balance method, it is important that you need to have this. So this is a mandatory field. No, this is it. Okay, now let's try to calculate. Can you please tell me how much? In the second method, we will ignore scrap value. We will not worry about scrap value in the calculation. In reducing balance method, whether the question giving you scrap value or not, we will calculate using the cost. So please, how much is the answer?
2,000.
2,000?
No, 4,000.
4,800, I think. Am I right there, sir?
Yes.
Year 2.
This 4,800 is the
Depreciation for the year, 1 year.
Okay.
First year or 1 year, you can say anything. Now the second year. How you calculate depreciation for the second year? Please note the cost minus actually this is the equation. This is the equation for reducing balance method. Cost minus accumulated depreciation into
If one,
rate.
this one equal or what?
This one equation
Equation.
for reducing balance method. So, you need to take the cost. Now, I will do the calculation for the first year using this equation. Then I will come to the second year. First year, year 1, depreciation is equal to the cost. How much is the cost? 12,000. In the first year, do I have any accumulated depreciation? No. 0 into 40%, which is 4,800. Year 2, depreciation 12,000 minus how much? 4,800 into 40%.
2,880.
2,880. Now, if I ask the answer, how to calculate the third year?
12,000.
Minus how much?
2,000.
Yeah. The total of this and this accumulated depreciation at the end of the third year. I mean the 2 years. So you have to take the previously calculated depreciation total. That is 4,800 plus 2,880. How much?
768.
6,000?
768.
12.
768.
768. Okay. How much?
1728. 1728.
1,700.
28.
20. Now, we'll try for another small mathematical trick. What is the answer here? 12,000 minus 0, how much? What is the answer here?
7,200.
7,000? And then, what is the answer here?
4,320.
4,320. So what I try to say, if you know the net book value at the end of the year, then your depreciation will be percentage into the net book value. That's what I wanted to say. Now, for example, to arrive this answer, you subtract end of this year. See, end of first year, your net book value how much?
Minus 4,000.
The 7,200, no?
Again, please.
See, Habibi, end of the first year, your depreciation is
Yes.
4,800. So, end of the first year, the net book value how much?
7,200.
Okay.
7,200.
Mm.
So, second year depreciation, you can do what? Take that 7,200 and multiply by this, you will get this. You You can do that way or this way. Clear?
In this case, we'll make every year until
Oh,
finish the amount.
Yes, exactly. And then the exam will tell you lifetime. If the examiner tell you lifetime, you should stop at that. For example, in this exam, if they say 4 years, let's assume 4 years. Huh?
4 years in this case.
Example, yes.
Reducing or
Reducing the in this case.
Ah,
Okay. Now, how many years we
And
finish now?
also will tell us the rate.
Yeah, definitely they should give you the rate.
Okay.
The number of years optional. Let's assume now 4 years. So now how much is the total? Can you tell me end of third year, what is the total accumulated depreciation?
9408.
How much?
9408.
9408. What is your cost?
12,000.
Minus your net book value is, sorry, your
2592.
the accumulated depreciation is how much now, the difference?
So net book value, right?
Yeah, net book value.
So 12,000.
End of the year.
9408. Comes to 2592.
Do you need to calculate depreciation for the fourth year? Oh, in other words, I will rephrase the question. How much is the depreciation for the fourth year? How many years lifetime?
4 years.
4 years. So by end of the fourth year, your asset should finish. Correct? So, in fourth year depreciation is
Same.
this amount.
The balance.
Yeah.
Because the scrap value is not there.
If scrap value is there or not there is another story. Yeah, if scrap value is there, then you need to subtract the scrap value.
Because if you get 40% off and 80%,
See,
second
in
year,
the, if I use the previous example, I have scrap value how much?
Sorry, 2000.
2000. Correct? So what is the difference I have here?
592.
That's the depreciation. That's all. This method understood or not understood?
So understood, but this reducing balance there, we don't want to calculate the scrap value, no?
That's why you don't use the scrap value, but the end of the fourth year, you still need to get 2000 from selling to someone. No? So, how much more you can reach? So, your net book value should be how much end of the fourth year? If you have a scrap value of 2000, in the first method, straight line method, end of the fifth year, your net book value is 2000. That's equal to the scrap value. In this case, we have taken only 4 years. And I am saying your scrap value end of the fourth year is 2000. So, now end of the fourth year, my net book value is 2592. So that means I can only depreciate another
592.
592.
This is depreciation.
Yes.
592.
Yeah. Now let's try to do our graph. This is the cost. This is the time. So go like this. We can discuss little about mathematics here. I don't want to do this. Now here, see this